Hello, thanks for joining me again. Today I thought we'd do some more price and volume analysis and look at the gold futures chart. This is the weekly chart, and we're going to start around about January 18, so 18 months ago from now, and just follow the price action through and look at it in some detail. You can see we've got a previous high in the background here that's creating some resistance. This is very high volume here, and you can see that price has responded to that in relation to the previous high, and it's been the limiting factor. And the next bar was down, and down on pretty substantial volume there too. That extra volume has probably caused price to come down for a following day, and volume has reduced on that day. Now, the next bar was back up again here on relatively low volume, so sellers in the market had probably retreated by that stage, and we've got a low we can mark here where price has reversed, but the limiting factor of the previous high is still causing some issues. You can see that because price has closed back below the line, and it hasn't been able to force its way back above. So we've now had two tries to break above this level, and price hasn't been able to do that yet. The next bar was an inside bar, trading inside the range of the previous bar, and the volume was low, so there was no real intent there. It was the market consolidating and just seeing how much supply might emerge, and the next bar was a little bit like a shakeout, and volume was about average. The next two bars after that were both inside this shakeout type bar, both on average volume. Nothing particularly interesting to see here, and then the price pushed up again in response. So what the market had found in this area here, that there really wasn't any serious supply being drawn out, and it's tried to push up and challenge this previous high level again. We'll mark the important levels again, so you can see where we were. Now, once price got it back above that line there, you would have been hoping that price could turn bullish again. It was like a little shakeout. There was 2 days of consolidation, which didn't draw out any serious supply. They were trading inside this little shakeout sort of bar, and price did push up and close above the high of this bar. But instead of accelerating higher, like you might have hoped, price didn't. It came back again and didn't really go anywhere. And then the next day, price traded inside the range of this bar with no great response in either direction. There was another challenge higher here, and that's this volume. It closed mid-bar, back below that line again, and the next bar was down, albeit inside the previous bar's range. Now, here you would start to get worried. This bar price closed below the low of that bar. There was obviously some difficulties here with the mid-bar close, and prices come back, but it did find support at this level again. You can see that price is about average here, nothing to write home about, but there was some support because the next bar was up in response. Now, volume had increased here, and the spread was narrow, so it was still drawing out supply because on that increased volume, spread should have increased, but it didn't. It wasn't able to for whatever reason. The close of this bar here has probably been the limiting factor. Prices moved up to it, and that was about all it could do. Now, we'll remove that. We'll go ahead one bar. Hopefully you all know what I'm going to say next. Price is broken down. It's not confirmed as yet, but it appears it has. Volume is above average, but not too bad. If that was really, really high volume, you'd wonder if it was going to be some sort of climactic reversal. But price is closed fairly low. It's on just above average volume. that's always a bad sign. You'd actually prefer, if you're wanting price to go up here, you'd actually prefer to see really, really high volume, and then the next bar go up or not go down any further, and you'd be suspecting this might be some form of engineered multi-bar shakeout or reversal. But when it's just average or slightly above average, it breaks down below an important level like this. Spread is wide, it's clearly below, it hasn't just closed below by a small amount, closed clearly below that level. You're always concerned then. So let's go ahead another bar. Now there's only a weak response higher. Price has, volume has increased considerably, but price wasn't able to get anywhere near the high of this bar. If price was going to turn bullish again, you want to see price close back above this level. Here's your important breakdown level, but this would be the level I'm going to watch for an indication of the market wanting to go back higher again, the high of the breakdown bar. So let's go further again. Now you've got a bar that's closed inside the previous bar's range. There's no knowing exactly what was going to happen here. The important level now is the low of that bar. This is going to be, you see, this is where the breakdown bar was. Now the low of the breakdown bar, if that got taken out clearly like this one did over here, like this, then you'd be looking at price really going to go further down. Now you've got the breakdown there. You've got a weak response from the breakdown. There was some attempt to support the market, but here there was no demand whatsoever. Price tried to go up, little narrow spread up bar. After the weakness, you've got weakness in the background. That's this breakdown here. And this is all now considered weak. This was an attempt to, or even this one too, this was an attempt to break through the previous high, and all attempts failed. So prices pulled back, and you've got your breakdown bar here. Now you mark the low of the breakdown bar like this, and prices looks like it's going to break down a second time. Now you're getting some sort of domino effect lower, and if price was going to turn bullish, that was your level you were going to watch. Well, that's been taken out. Now you could look at this level as your potentially bullish level again, but with another breakdown, you'd have to start being concerned. We'll go on further. Now the volume was lower on this bar, and you can see spreads narrowed, which you'd expect it would be. Prices closed almost in the middle. Supply has eased on this bar, but there's no way you'd be wanting to go long. And we'll go forward another bar. And now you see prices broken down below the low of that previous bar. Here's your next breakdown. This bar was questionable. The market didn't continue selling here, but there's the low of that bar. You can see prices broken clearly below it. Now you would say, seeing there was a mid-bar close or almost, a small amount of support in the bottom of this bar, which caused that close to be up near the middle of the bar, and that was taken out by this next bar. So we'll go forward again. Now there's a little bit of support coming again. Price did dip below the low of this bar here, but it's eventually closed back above that bar's low, so it's closed inside the previous bar's range. There's a tentative support in the market. You wouldn't want to be going long on that. If you really had to go long soon, you'd want to see the high of that bar taken out at least, preferably above that close. But you shouldn't be looking for longs at this point unless you're really speculating at the bottom for very short term. Now, we'll go ahead again. You can see price, here was the close on this bar. Price did try to go up a little bit, but it's got smacked down by increase in supply, pushed back down to close low, and below the low of this bar, where we saw a little bit of support come in on the next bar. The low of that bar was taken out by this bar. We look at that bar's low. Now this bar traded below that low and recovered to close back in within the range of this bar, Now this bar here tried to go up in response, got smacked down by an increase in supply down here, and has closed below the low, this bar's low. So this is looking like it's not going to be able to sustain a recovery at this point. So we'll go forward again, and price did go down. Now we've got another mid-bar close, an increase in volume. There's been another attempt to support the market. Prices sliced lower and then floated back up on some tentative support in the market. And you still wouldn't want to be going long at this point. You've seen no intent by the market to take it higher. All you've seen is price continue to break down with some tentative support. And if supply comes in each time and the support can't hold, then those people who did buy, they just dump their shares and they're gone, and that causes these widespread down bars. That's why these bars all close with an increased spread over the previous bar, because anyone who did try to come in and support the market, like here, possibly here, in here, there was like modest support, tentative buying. But when these people can see that price isn't going to find ongoing support, they dump, and these bars develop, these down bars. So at this point, there's nothing to see here really for the long side. Now, next bar, very narrow spread, an increase in volume. There was a more serious attempt to support the market here. People may consider going long here. I'm a little bit more careful. I want to see some intent first, and we'll be able to show that as we go along. But some people would go long on that, expecting some sort of response for sure. But there was no response. Let's look at this one. Price has come back down. It's closed within the range of this down bar here where there was a mid-bar close. Price has closed below the low of this little narrow spread bar on high volume. Price dipped below the low of this bar, but it's closed back within its range. So, and volume was low, below average. So there's no doubt that there was some lack of ongoing supply in the market, and that's probably what's caused the mid-bar close, a lack of selling pressure. You could still consider going long. I wouldn't be, but some would be. Let's just see what happens next. Narrow spread bar, inside the previous bar, low volume. No ongoing selling pressure, but still no great sign of going higher. Now, spreads increased, volumes increased, prices closed off the low. There is some support here. We would just have to wait and see what's going to happen, whether there will be ongoing support come in or whether the supply will continue and knock price around. An up bar on low volume. The high of this down bar has been the limiting factor. Price has pushed up to it. But that up bar does say that the increase in volume here was some buying off the lows for sure, no doubt about it. Some support had come in. Just how much support, we'll have to wait and see. Price tried to push higher, wasn't able to, but it didn't actually lose that much ground, really. A little, but nothing too serious. A narrow spread down bar. Now we're still within the range of this bar, and we're within the range of this up bar. We're looking at these two now as a potential reversal of some sort, with the high of this down bar being the line in the sand as to whether price may turn bullish in the future. This sort of bar confuses people. It's an up bar, but only very marginally. Price volume is average. Now, it sort of looks like temporary support in a downtrend, and it might end up being, you don't know at the time. If this was all selling, the bar would look more like this. But it wasn't. the bar actually went up slightly. There was no huge amount of demand in the market. That's why it's not closed right up there, it's high. But it actually made a small amount of ground on an increase in volume. This was more than likely some consolidation, some absorption. It wasn't all bad. At this point, we still haven't seen any great intent from the market to say price is going to start climbing higher, but we've seen some modest support come in here, and then that was confirmed by this bar being up, limited by the high. So we've marked the high with this little line here, which is going to be some sort of guide as to when price may turn bullish in the future. Price tried to push away. That was more confirmation of some buying in here, these two bars combined, and then a couple of consolidation absorption type bars. So we'll go ahead further, and another bar, very similar. Once again, price has gone up slightly on about average volume. If it was all selling, price would have broken down, particularly below the low of this bar, but it didn't. So the thought would be that the market is absorbing, consolidating. It's not ready to go higher just yet, but it's certainly not as bearish as it was when price was breaking down over and over. Next bar is down, closing in the middle on an increase in volume. And you see price is still closing back above this little down bar, where we're saying all these cluster of closes all together is some form of absorption or consolidation. You've got another bar remaining in this group. Now, it has dipped below the low of these bars, of the last 4 bars. So any stops down here would have been taken out. This is like a little mini shakeout. And it's closed back up above the low of this bar, which is, your thought would still be of some sort of consolidation after these 2 bars saw some support come in. And that's the same thing again. Your up bar is confirming that this was absorption, consolidation continuing. If this bar was a down bar, it went down here, you'd have to think this was supply coming in. But price has gone up after this like little shakeouty sort of consolidation bar that's dipped below the low of the previous few bars. And we'll go ahead, another bar. And there, that's exactly what you're looking for. This is the market showing some intent. Prices closed above the high of this down bar, which we interpreted as some sort of buying support. It's a reversal, but the reversal never really completed. Right across here has been consolidation and absorption after we've seen this potential buying and support come in here on this volume down here. Now, prices closed above the high of this down bar, and this is the market showing you some intent. There's optimism in the market that price is going to move higher. Now, the next bar saw a little bit of no demand come in, and just on this bar that showed intent, you can see that volume increased considerably over the previous 1, 2, 3, 4, 5, numerous bars. This was a real breakout bar. That's what this was. Now, the next bar has closed poorly, narrow spread on a low volume. There's a lack of demand there. Now, after you've seen this bar won't go away. There's strength in the market. It would take some real overwhelming supply now to break this bar's intent. But that's not to say that if some supply came in, price didn't have to drift lower to absorb that supply. And there's no guarantees that price is going to take off after this bar. Probability is now much higher that price is going to try to move higher. Now, you've got some no demand here, so you might see price wanting to ease lower, test the strength of this breakout, and absorb any supply that's still remaining in these bars, because from that close there's probably some people who have been locked in to a losing position down here, and they're saying, once I get a chance to get out for break even, come out. So there'll be some supply sitting there for sure. So we'll go on. Prices moved higher, only modestly on average volume. So there's still some demand in the market, there's no doubt. And that's like a test bar. Price has traded below the low, it's recovered below the low of the previous bar. It's recovered to close back up. So there's two adjacent closes now. Price could now continue higher. At this stage, there would still be a 50-50 chance, I would estimate, that the strength of the breakout will be tested at some point. The higher price went without testing the breakout, the lower that percentage becomes. But at my guess, my estimation would still be 50-50. Price isn't that far away. You can see that the high is 12.07 and price is currently 12.32. So I would be saying that there's still a 50-50 chance that the breakout line will be tested. That's the line above the high of this down bar where support was first seen. Okay, go on. And price has come immediately back down. It's touched this level and found some support because it didn't go any lower. If there was no support there whatsoever, you would expect price would have continued lower, and it may still. We'll wait and see. Don't worry, the intent on this bar is still there. If the low of this bar was taken out down here, then you would say, oh, well, I'm starting to think that the breakout isn't going to be supported in the market. But while price remains within the range of this bar, there's a good chance that the breakout bar remains strong and the intent is still there. Okay. Price dipped below the low of that down bar and then recovered to close back up within the range of it. So support did come in through here. When price dipped below, it's tested the buyers and threatened them, and they've come up with the goods and decided that they're going to keep buying, support the market, and prices closed back up. Now, this is a no demand bar, so there may become a secondary test. Okay. There's the line we're looking at. Price has come back and tested it here, found support. This is a no demand bar. There's no real weakness in the background though, and no demand is really only an indication of weakness when there's weakness in the background, some sort of serious selling. But we've actually got support in the background here, and then across here was buying in the form of consolidation and absorption. So this isn't telling you that there's weakness in the market. This was the market just waiting for some reason, some favourable conditions to move higher. Perhaps conditions for whatever reason weren't quite right at the time. So price marked time. It just sat there, didn't want to go up, couldn't go down because there's too much strength in the market. So it just sat there marking time. Okay, let's go on again. Let's see what the response is. Always looking for the response. And the response is a high volume test shakeout sort of bar. I would be guessing that where the close was there on this bar here, prices initially tried to go higher, which is giving you some sort of confirmation. Because remember, this is a weekly bar, so the initial response might have been that price has gone higher, and that would be telling you that there still was support in here, but the market wanted to do some form of shakeout because it's come back down to this level and tested it. So it's just confirming. So it's the market's way of confirming that supply isn't going to be overwhelming. So we'll go ahead one more bar again. And there's a response higher. It's gone above this bar here. Now, let's just frame this quickly so you can see. Here's the line we were looking at. There's the next high level we're looking at. And you can see prices clearly pushed back above that. So there was intent shown here that the market was likely, the probabilities had risen considerably that price was going to move higher. And you could be looking for a long after this bar. It doesn't mean you've got to get straight in the market and jump in, unless you're a really short-term day trader. But if you're looking for a swing position, you're probably originally looking for a test of the breakout here, the breakout above the high of this bar. So across here somewhere, you've had a chance to buy in, and here's the next breakout bar, and that's confirming the intent in the market. There's no doubt about it pretty much now. I mean, things can always fall over, but at this point in time, unless there's some unforeseen circumstances arise, the market's intent is to move higher here. Okay, next bar. Next bar is a narrow spread down bar on a reduced volume. This was a little consolidation, testing the breakout above the high of this bar. It's a little consolidation bar. It's an inside bar. Volume's low, so the selling pressure was low. You probably expect a response higher to this bar, but this was the market just testing this breakout, making sure overwhelming supply wasn't going to arise. Because remember, if you look across here, there's always people locked into levels. There's two closes clustered together here where there was a little bit of support arrive before price broke down again. There was all the way through here. There was middle levels of support that tried to come in but kept on failing over and over. And when this support came in, people, they buy, but then they don't sell when they have to. They don't want to take a loss, so they keep on holding. And that's supply that's drawn out each time price rises. So let's go ahead a bar again. And prices responded higher. It's responded to the low volume, the lack of selling pressure on this bar, and it's pushed up. It's closed off the highs a little bit, so there was a little bit of supply there. It's corresponding to this level here. So let's go ahead another bar. It's not serious. It's just a little bit of supply there. Prices gapped from the close, and it's accelerated higher. Now the volume was low, which means selling pressure was low. That means the sellers had left the market for whatever reason. Maybe they'd already sold here, anyone who was still holding. Looking at this level here, because this is your next breakdown level. This was the breakdown bar here. This was a line we marked. Here was the initial line. This was the breakdown bar. This was the next one. This was the breakdown bar. So we're up to here. We'll go ahead again. There's the breakdown line. There's the breakdown bar. Prices raced up to it, and there is supply there, stuck here. And these people want to get out. They've been underwater for quite a time in this period, and they're wanting to get out, and they're the ones that have sold. Now, volume isn't particularly high, so there wasn't that many there, but there was some, and that's what's caused price to close back below that line. The second bar, it's up, so the market still wants to push higher. Volume was actually slightly above average, and it's a very narrow spread bar, so there was still some selling pressure in the market, but it's an up bar, and at this stage, it's not a very bearish bar. It was more than likely an absorption bar, where the sellers from over here, locked in sellers, and any short sellers who might think that the market's going to turn over because they've possibly misread the chart after the intent here and the intent here, it's less likely that the market's going to turn down now. But there's always sellers in the market, don't worry. There's people who are going to go in short, even if they're just looking for a little short-term dip. But there's no serious weakness in this market right now. Next bar. It's a little down bar. It's another consolidation bar. Prices tried to move above this close, probably copped a little bit of supply, and it's pushed back down, but it's closed easily within the range of this bar and within the range of this bar. It's a consolidation bar. It's a nothing bar. It's not seriously weak. It's not particularly strong, but not particularly strong individually, but in context with what we've already seen, we can see that there was some people that were probably locked in here, and this supply needs to be absorbed. The market doesn't generally race in and try to do the whole lot in one bang go. unless there's a real intent for some reason to push the market higher, generally it happens over a period of time, and that's what's happening here. You've had a couple of weeks of consolidation and absorption for this level here. Next bar. It's an up bar. It's closed above the high of this bar, so they're winning the battle. Volume did increase again. It's closed very strongly, so you would say the intent is still there to push higher. This is the next level we're looking at here. That was the next breakdown bar. We're guessing now, because prices closed above this bar's high, we saw that that's where the supply came in and pushed price down, and price moved just above it, just below it as the absorption process continues. This was the next level that I marked. Let's see where price goes. Now it accelerates through that level, showing some intent again. These were increased spreads as price accelerates away. It is giving you an idea on what the market as a whole is thinking. Now it's pushed higher with intent. It's an acceleration higher. There's likely to be, if there was some supply stuck here, there's likely to be a reasonable amount of supply stuck in here, you can be guaranteed. But prices pushed up with intent. That's also a way of the market encouraging people who are stuck to remain in their position with the promise of future profits rather than ongoing losses that they've been holding for a period in here. So we'll go ahead one more. That's a consolidation bar. It's an inside bar. Volume was really low, so selling pressure was low. That's just a regular VSA would call that a test bar, and it's a really nice looking one. For it to be successful, you need an up bar in response. But that's just a nice looking little consolidation bar. Next bar. A second one. It's a secondary test, a secondary consolidation. Both these two bars here are within the range of this breakout bar, breakout above this bar's high. Because this wasn't really a breakout bar here. This was ongoing consolidation where the sellers were probably absorbed by the end of the week, and that allowed price just to float up and close above the high of this bar. It wasn't really a breakout bar. Breakouts generally have increased spread, increased volume, and close clearly above a level. And this really didn't close clearly above a level. You can see he spent a period of the week down here, below the low of this bar, almost equal with the low of this bar. He spent most of the week in consolidation, and it probably finished absorbing anything from over here. Short sellers probably eased off. They could see that the tide was about to turn the wrong way. They're covering their short-term positions, and prices just floated up by the end of the week to close just above the high. And this bar is your next breakout bar with two consolidation bars in response. Now prices accelerated higher again, but it's closed way off its high, and it's probably, if we mark that close, you can see it's probably started to cop some supply from stuck holders over here. So you'll probably find the price will come back, try to consolidate in response. The low of this bar or the high of this bar are the levels to watch. Whether you want to mark both and have a zone, or think of it as a zone, or just mark the low of that bar. If that was to be taken out to the downside, you'd have to think there's going to be a deeper pullback. If not, the uptrend remains intact comfortably. Next bar, it's down. It was going to be down, wasn't it? It's a cop supply here and this bar here. There was little doubt that it would have to pull back to some degree. Now, there's the level that I marked. Here's the other level, and prices closed marginally below that level and marginally above that level. So it's closed right in that zone. It's unsurprising. It's a big widespread down bar on just above average volume. There might be an attempt to support the market here. It might also continue to go down now. We had consolidation in here, So this will be an area where it will be supported between here and here. So we'll see what the market does. Now there is an attempt to support the market here. Volume increased, price dipped below the low of this bar, but then it recovered to close about level. So there's an attempt to support the market here, no doubt. And in response, prices pushed higher, only modestly. This was a bit of consolidation. The market is trying to absorb the supply that's been drawn out. But this bar here showed a bit of this bar and this bar showed some weakness, so showed some selling pressure, probably from the left. They're not going to go away either. So really, until price goes above the high of this down bar here, the market's in consolidation at best, sideways to down. Here's your level that is telling you that price is going to continue higher. This bar here took out the low of 1, 2, 3 bars. That's 3 weeks worth of trading. This was a little bit of weakness coming. It's not to say the market's going to turn around and continue lower and crash. It's just telling you that there was some supply drawn out in this bar in particular, and it was confirmed in this bar. And it's going to have to be a period of consolidation for that supply to ease and be removed, be absorbed. So we'll go ahead 1 bar again. Prices continue higher. Now volume was pretty high there, and it didn't actually make very much ground. So even though the market is trying to push higher, there is supply in the market, there's no doubt. Otherwise that bar would have been much wider in spread. That's pretty high volume, really. It's higher than all these volumes, and 1.65, 1.6, so it's higher than that one as well. So it's higher all the way to this bar down the bottom here. That's fairly high volume, but a fairly narrow spread. Supply is still in the market. It'll probably pull back in response. Now you can see initially prices continued to try to go higher. Here's the close of that bar that we just talked about. Prices going up. It has been copying supply. It's been unable to cope with it. Eventually it becomes overwhelming. Price pushes down. Now it's closed back around above the low of the initial down bar, this one here. So all is not lost, but it was pretty obvious, or the probabilities were higher on this bar after it really went nowhere or didn't make very much ground on an increase in volume, that price was going to pull back. If the supply continues, you'd expect it'll close lower below this bar's low. And if that's the case, a deeper pullback is going to happen. Otherwise, price will continue to absorb sideways, removing any supply that's stuck over here before it can really continue on. Let's see where it goes. It's a consolidation bar. It's dipped lower. It's the market trying to support. The low volume says that selling pressure has eased. It hasn't been completely removed because it's almost about average. The price has closed after dipping below the low of that bar and below this level. It's recovered to close back above it and almost level with the previous close. So there was some support in the market, and the lower volume tells you that selling pressure did ease. But it only eased for that period in time. It doesn't mean it won't ease for next week as well. More supply can be drawn out. It just depends what events are happening. But at that point in time, supply eased. We're still looking at the high of this bar, or somewhere around the close of that bar. There's a little zone there. If you went back to a shorter time frame, you'd probably be able to find the exact level. There's no real need to know. It's somewhere between the high of this bar and the close of that bar. If price gets back above that, we're off to the races again. In the meantime, we're consolidating or pulling back to challenge sellers so that they can be removed. All right, next bar. Price didn't lose any ground, closed roughly equal. Price tried to go higher in response to this bar, where we saw that the low volume was saying selling pressure had reduced. So price responded by pushing higher initially, and that's a good sign. That's showing you that there was no supply in the market at the time. Volume wasn't particularly high, so there wasn't a great deal of demand right there, then and there, and it's closed back level. Now, whether the price goes sideways, goes down in response, the response will be important here, because if this level we've got marked gets broken, then price is going to pull back more deeply, and if price continues sideways, it's comfortable absorbing the supply at this level. Price breaks below this level that we've got marked, but with a relatively narrow spread or average spread at most, and on reduced volume. Now, it has closed clearly below that level, so it's a concern. You need to watch subsequent bars here. You'd be scratching your head wondering if price is actually going to break down again here, or whether price will continue to find support. Volume was lower, and spread wasn't particularly wide. You're always worried about widespread bars. So you remember over here, when we were talking about this being a breakdown bar, the widespread was showing you it was a breakdown, and the increased volume. And here, this widespread, clearly below the previous bar, the low of the previous bar, on decent volume. It's always what you're looking for. And same across here, when we looked at this bar as being a breakout bar, it's a widespread, increased volume. These are the bars, the breakout bars and the breakdown bars. Now this one over here, it wasn't a particularly widespread. Volume wasn't particularly high. This was like an uncertain market that wasn't sure which way we were going. Demand was low, and the normal day-to-day supply in the market has pushed it a bit lower. But I'm not convinced there that the market's going to break down. And in response, prices pushed up again. It's dipped below the low of this bar, but it didn't continue lower. Instead, it recovered. So there is some support in the market, but price wasn't able to close back above this level that we've marked. So there was modest support in the market, but it didn't continue to break down. So there was no downside follow through. That was the important thing at this point. Now we've got a consolidation bar. The volume was higher. It's a down bar, but it's traded inside the previous bar, inside this bar's range, or the closes inside this bar's range. This was a consolidation bar. The increased volume says that the market actually tried a bit harder to absorb. If the sellers that created this higher volume were overwhelming the demand, price would have closed below the low of this bar here, particularly when it traded below it at some point, but it didn't. It recovered back up. It traded within the range of this bar, the previous bar. This was the market absorbing supply. Here's the important level still. If there's downside follow through here, then the market's going to pull back more deeply. At this point, the market drifted lower on uncertainty and on lower volume down here. And then since then, you've got some consolidation. Next bar is a narrow spread up bar on higher volume. Now, this is a questionable bar. This could be that price is going to break down next bar, or it could be an absorption bar and price is going to break out above this level. The narrow spread meant there was supply in the market. The increased volume could only make a very narrow spread. If it was a breakout bar, it would have had a very wide spread. But high volume, narrow spread on an up bar individually is telling you that there was a lot of selling pressure in the market. If the selling pressure wasn't there, it would have had a wider spread if it was all buying on that high volume. It wasn't, so you'd be worried there if you were a holder. Just have to wait and see. Next bar. Any guesses? Now, here's the close of this bar. Price must have initially pushed higher, which said that was probably absorption. But there was supply in the market, and it's pushed it back down to close at its low. Now, it looks really weak here, but just the fact that the high volume on this bar, the narrow spread bar, caused the initial response to go higher, says the market is still trying to absorb. Now, when there's supply in the market doesn't want to necessarily buy it all at an expensive price. It would prefer to let the price come down and absorb it at the lowest possible price. So here's the important level at the bottom where the breakdown is going to occur. Here's the level that we're looking at for a recovery to occur, and here is where we're going to consider the line in the sand for the market to turn bullish again. So we'll keep this one marked at the moment. If that line gets broken, it's going to break down further. If price closes back above this, we're starting to see some recovery, demand overwhelming supply, and up here is where we're looking at the market to turn bullish again. Okay, next bar. It's a consolidation bar. It's a little up bar. Just the fact that in response prices closed higher says that this is an overwhelming supply. Price is not probably going to break down here. Every opportunity to break down is right there. Look at how bad this bar looks. High volumes, closed low, and in response, prices actually closed higher, albeit with a narrow spread. Volume still pretty high. This is suggesting that the market is still absorbing in here. It's happy to absorb the supply that's being drawn out in the market. It's not as likely to break down. It always can break down, and if supply becomes overwhelming, it will. But at this point, the market continues to attempt to absorb the supply. It had every opportunity to break down here, and it didn't. You'd have to be reasonably comfortable that the market is absorbing supply, or at least attempting to. Okay, next bar. And there's the intent. The intent to break back above this breakdown level, or this minor breakdown level that we had marked. The widespread, the high close. Look at that bar. Let's just mark it. Look at this bar standing tall and proud on high volume like this. This is the market saying, all right, we've absorbed the supply that's come in through here, and we're in charge. The buyers are in charge now. The way that bar's standing up straight like that says, right, we're back in charge. Game on. Game on, moles. Okay, next bar. And there it is again. Now look, price is now closed above the high of this bar. We've been saying for a while that when that happens, the line in the sand has been broken. Some people might mark this level here where price came up because it's a high volume. I like breakdown levels, but however, either way, prices closed clearly above both levels, and the market's cooking with gas. You can look for a long again now if you're not in the market. Let's see where it goes from here. Now, 50-50 chance still that this level gets retested, price comes back to it. Price did come back to it, but that's still a consolidation after the breakout. That's not really price going up, coming back, accelerating away. It's still a test, and on a daily basis, if you went back to the daily bars, remember this is a weekly chart, you may have seen an initial push higher, push lower, recover, which would have looked really nice. But let's see where we go again. That's just a nice consolidation bar. Volume was lower, so selling pressure eased, there's no doubt. You'd say after what's happened with the consolidation through here, and these two up bars on an increase in volume, closing strongly, standing up tall and proud, and then this bar, which is traded lower and recovered to close almost level and reduced volume, the buyers are still in control, little doubt. And then price accelerates higher. Volume is really high. I've marked this older level. It's a long-term level. Price has accelerated up to it with real intent again, closing high volume, the buyers are in charge, little doubt. Next bar. Okay, volume increased, spread narrowed considerably and closed poorly, closer to the low of the bar than the high. So supply is being drawn out. It did close as an up bar. So you have to see what the response is going to be here. It may well be that the market is going to continue absorbing supply. It doesn't necessarily mean price is weak now. There was supply drawn out, there's no doubt. Look at the high volume. Look how much ground the market made on this bar here, on that much volume. Now look at how much ground was made. The spread narrowed considerably to start with, and then price only went from the close here to the close here on all this extra volume. That was supply coming in, thwarting the buyers, making it difficult. They were selling into it. Short-term short sellers were probably in there, taking positions, looking for a short-term pullback. There was supply there, no doubt, but price did make ground. It didn't break down. These closes here, or the low of this bar, is now your line in the sand to the downside. I like that level still, and it sort of corresponds with the low of this bar on the high volume. But you can see where I'm saying close, low, somewhere in there. If that gets taken out to the downside, well, we're probably pulling back again. But up to this point, we've got some weakness come in. Price is actually above this longer term level. All's not lost. Some people would go nuts saying, oh, it's all over. It's not. Prices accelerated higher from the close, come back, dip below, it's closed back, right on that line. That's nice. You've got two closes on that line, which is a nice way of saying that the line is in the right spot. There is something there. These lines are generally zones where if you get the line right, the most powerful part of the zone is on the line, and either side of it is support and resistance. They're generally zones. The line just marks the exact level, if you like. Okay, next bar. I'd also note that the volume reduced a little bit on that bar. Still fairly high, so there was an attempt to absorb. Especially you can see price dip below that line but closed back above it. So there is still an attempt to support the market, there's no doubt. There is supply being drawn out. You can see by these two bars, just their shape, the high volume, where the close is. There's supply in the market, no doubt. But there's still the market is still trying to absorb it. Let's go, next bar. In response, price closes higher. That's confirming that there was support down the low here. If there was no support, there's no way this buy was going up. If there was no support or not enough, price was going to close down here. Like bar was going to continue lower, closing down like this. But this bar is closed higher. Within the range of that bar, it's an absorption bar. Volume is actually a little bit higher here. The market continues to support the buyers continue to support the market, and there is an ongoing attempt to absorb the supply coming in. Next bar. Volume increases, price goes up, another close off the high. Remember, we're still above this line where we saw those two closes showing that the line is about in the right spot. Just because we've moved above it and we haven't closed below it is telling you that the market really does have a confidence and it's trying to absorb the supply that's being drawn out above this important level. And the close off the highs here, almost mid-bar, on an increase in volume says that there is supply in the market, no doubt about it, but the market is trying to absorb it. We'll go ahead another bar. And that's this week, or the last week that's gone. Very narrow spread down bar, even higher volume. This is the market continuing to try to absorb. In fact, very narrow spread like that, almost abnormally narrow on very high volume, increase in volume, maybe even the highest volume we've seen recently. it looks like absorption. We'll have to wait for the response as usual. Always wait for the response to tell you what was actually happening within a bar. At this point, I anticipate at this point this was serious absorption, the market really wanting to accelerate higher in response. And that's going to be this week's trading, which opens tonight. So we'll just have to see. Now, just before we finish up here, just a couple of points. This market is now said to have strength in the background. Once we saw this and it was confirmed by a breakout here, then there's strength in the background of this chart, and that's caused a positive influence in the market. And this influence will be established until we see some sort of weakness emerge. The weakness will be some form of selling that we should be able to see, and then in response to that, a breakdown. That breakdown will be the confirmation that weakness has now been established, and we should look for the downside. Just like over here, when we first started and we saw price struggling to get above the previous highs, and then there was a breakdown, breakdown bar here, and we kept on marking further breakdowns. We saw little periods where there was an attempt to support the market, but each time they failed, we'd seen no great reason to go long, not for any decent period of time apart from very short term, until this came along. What came along in here, and then we saw this confirmation of intent in the market, and that was your turnaround. Okay, thanks for that. Hopefully that was informative and you enjoyed it, and let me know either way. And I'm done. Thank you. See ya.